Hello everyone, this is today's video analysis for June 27, 2019. Today we're looking at the USDJPY, the US dollar versus the Japanese yen for today's trade analysis. Starting here, daily time frame, we've zoomed to a good spot where we can see the longer term trend. You can see the blue trend line, right hand side of the chart, shows the trend has been down. There have been a couple of periods of retracement, pullback, or range bound congestion for the past several months, going all the way back into April of this year. The past couple of months been a bearish trend. Previously, not too hard to see, it was an uptrend just on the left hand side of the chart, where it spiked lower and then just kind of moved higher for a period of time. Now we've been moving lower. Anyway, the pattern within the trend is really what I want to discuss. Let's go ahead and zoom it in one more time. Of course, the blue trend line shows the trend. We had this one period here, and I'm actually going to circle it, where the market had a pretty significant pullback, a little bit of a retracement back underneath. Actually, the 100 period simple moving average, finding resistance there, the green line, 100 period moving average inside the blue circle, and falling. Then it went into this little period here. It was 5 or 6 days where it just kind of bounced around between the yellow, the green zone, finally moving in the direction of a trend and breaking out lower. Then it went for a long period, the middle black box, the larger one here, where it went for a long period, range bound between the blue and the pink shade area, but for the most part finding resistance at the pink zone, 108.45, 108.70, and bounced around underneath it as resistance. Eventually the market selling off and pushing lower, breaking through support at the blue zone, all the way down to the orange and the green zone. In the recent couple of days, yesterday and today, we have made a rebound again back into the blue zone, which happens to be, again, close to the blue downtrend line. The blue shaded area, 107.85, 108.05. You can find resistance there, matching support on the left-hand side inside this larger box. You can see support there, matching resistance, the trend line coming into play. So it's pretty easy to see. The first things first, probably don't want to buy it right now. I know it's been moving up for the past 2 or 3 days, but buying underneath this resistance level, buying underneath the trend line, just doesn't make a lot of sense when you're trading in the direction of trend. Just think, you wouldn't have wanted to buy the pink zone, you wouldn't have wanted to buy the green zone up here. It just didn't make sense to do that. In hindsight, you can see that that was a better idea to be short at that time in the direction of the trend. So that's really what we're considering. Is more likely we'd want to be short here at the blue trend line, blue shaded area. The risk is that it breaks the blue zone, so we'd have lower risk, higher potential reward. We know that first off we'll target the orange zone. That's not too hard to see when you look here, and beyond there the green zone would be the secondary target, and beyond there, we might even look for it down into the mid 106s, which is the pink zone, very, very bottom of the chart. And again, the risk is pretty simple. We just don't want it to get above this blue zone. So stop losses, if you decide to go short, will be just above the blue shaded area. I don't, again, think there's any good reason to buy it. The US dollar's been into resistance after a little bit of a pullback from last week's move, so there just doesn't make a whole lot of sense to be long, but more likely to be short. Let's take it on down to the 4-hour time frame, and as you get it down here, let's zoom it like this. You can see resistance right now into the blue zone. We saw the market challenge into there. Suddenly the sellers are coming back. We have this sudden infusion of sell orders here, and giving us a clue that really the sellers are not ready to give up on this currency pair, and the buyers are having a difficult time breaking back above 108.05. That's really the risk. The risk is it breaks back above 108.05. We don't want it to do that. So you take the short. If it gets above there, you get out and you look for something new. But I think this is the best opportunity for the day on the dollar yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.